Citigroup Analyst Investor Day, the meeting underway in New York City right now. Vikram Pandit taking center stage, outlining his long-term plans for his financial supermarket. The stock currently trades unchanged, $24.27. I'll get you a share of it. CNBC's Mary Thompson at the meeting live. Mary, what can you tell us?
Well, Dylan, 5 months on the job, and Citi CEO Vikram Pandit today making his strongest statement about where he plans to take the financial giant. He warns, though, it's not going to be a quick trip, though, because hundreds of billion dollars in asset sales and billions of dollars in cost cuts are going to take a couple of years, not a single quarter. Here's Pandit talking about what he calls Core Citi.
Core Citi has 75% of earnings coming from high-growth, high-return, annuity-type businesses. 25% coming from more volatile business. Core Citi has a unique global presence. Core Citi is focused on international growth, particularly in the high-growth emerging markets, where we have a very large and significant advantage.
Now, Citi outlined plans to shed $400 billion of what it called non-core assets. That would include its residential mortgage portfolio, which it will wind down, as well as marking down certain illiquid assets. In addition to that, it says re-engineering is going to save $15 billion through cost cuts, credit improvements, as well as lowering the company's tax rate. Pandit told the audience Citi right now is a great entrepreneurial opportunity. He cited wealth management, which includes Smith Barney as one of Citi's best businesses, and cards and credit cards as key to growth, including the U.S. card business, which some had speculated might be sold off. Actually, Citi plans to boost investment in this unit to jumpstart growth here. Also in securities and banking, Citi plans to reduce its exposure to fixed income and expand its prime brokerage, commodities, as well as its derivative businesses. All of this aimed at helping Citi hit revenue growth targets of 8 to 10% and a return on equity of 18 to 20% over the next couple of years. Now, since being named CEO in December, Pandit has cut jobs, shaken up the company's top management team, all in an effort to reduce the billions of dollars in losses and billions of dollars in write-downs the bank has suffered because of the liquidity as well as the subprime crisis. He's also raised billions of dollars in capital, and speaking today, he said to have a lot of capital or excess capital right now in this environment is actually a strength for a company like Citi, a company that he's no longer calling a financial supermarket, but a global universal bank. Dylan, back to you.
All right. Thank you so much, Mary. So is the Citi CEO Vikram Pandit on the right track or not? Will his strategy turn this company around once and for all? Daniel Alpert, Managing Director of Westwood Capital. Our own Charlie Gasparino will be along shortly. Vince Farrell is here. Vince, do you own this stock?
No, I don't, Dylan.
Mr. Alpert, do you own the stock?
I bought some preferred the other day.
And why did you decide to finally get involved?
I like the dividend.
Do you have a point of view at this point yet, 6 months in, I guess it is, on Mr. Pandit?
I think Pandit is a great manager. I think he stepped in and he's certainly doing the right thing in terms of reshuffling the platform that he inherited. The problem is he wasn't there to put the assets on the books, and now he has to deal with this portfolio. A lot of people want to tell you that this is a subprime crisis and the write-offs have been taken, but the fact of the matter is this is a global leverage crisis. Things are still coming down the pike, and he's going to need to be a very good manager in order to be able to deal with them.
Vince, do you believe that this enterprise, forget Vikram Pandit for a second, that the entity that exists in its current form can be managed to growth and yield and success?
Dylan, that is the question, and you can't answer it without referring back to Vikram. It really is management execution, because Citi is full of warring fiefdoms. They have separate computer systems. They sometimes don't talk to each other. They're at war with each other. A CEO's job is to allocate capital and to get everybody rowing the boat in the same direction. Now, can he pull it off? Danny, I respect your opinion. I especially respect the thought you picked up that preferred with a good dividend, but I don't know that he's a good manager. I don't know that he has a track record that comes to the table with any sort of confidence, at least in my book. His very brief foray into hedge fund business was not successful. So he might be the guy to save the franchise, but it really comes down to execution. And I'm from Missouri on this. This is a huge behemoth. It's very hard to get all these systems working together. He's saying all the right things. It comes down to execution. Can you really do this across an enterprise that is so incredibly broad? I don't know.
Look, I think my investment in the preferred, or anybody's investment in the preferred, really is an investment in the platform. I think the franchise and the platform is really one of the greatest in the world, and it will continue to find ways to make money. The difficulty right now is in the financial sector in its entirety. It's a little bit of a rope-a-dope going on, every time the market starts to come after these stocks, they fade back to the ropes, in Muhammad Ali's word, and land a big blow because there's another round of write-downs. And I think that's going to continue for some time. I know that you had said a few minutes back that you thought, maybe the housing crisis was moderating. I'm not so sure. I think we're going to have a downward spiraling effect that's going to have an increasing effect on consumer spending, increasing effect on commercial real estate, and that is going to create more asset problems.
Charlie, also with us now. At what point will Vikram start to be very concrete, Charlie, about his plans? Obviously, today's not necessarily that day, but how much more time do you think it'll be before we really start to see him, if not take action, but lay out very distinct intention?
Well, he has been taking some actions. They've been shedding some assets. They've been laying off some people. They have internal goals as to how much he wants to lay out, how many people they want to lay off or get rid of over the next year. They're talking about 30,000 possibly through layoffs, through attrition, through asset sales. My view is he doesn't have a lot of time because, investors. When you talk to investors, they're sick of waiting. You know what I'm saying? He gets a little bit of a grace period because he's new. But the minute that investors think that he's being sucked back into the vortex, so to speak, of the Sandy Weill, Chuck Prince, and Bob Rubin regime. Bob Rubin is a board member. Investors are impatient. They think that the old management, the old guard, didn't do enough. They're obviously right about that.
But even if we accept that, even if we just put the past away and just start from today,
you can't do that.
Vikram Pandit still is running a massive enterprise that is going to require a certain amount of time to navigate.
You cannot put the past away on this.
I'm not saying ignore the past. I'm saying that from a decision-making standpoint, you can complain about the past for the next 3 years.
Well, that's why, and that's why their stock is where it has been. Yeah. And I think that's the problem. If you want to improve the stock price, you have to show concrete results, a concrete plan, a little more than this. I think, the whole concept of getting rid of 20% of the firm over the next 2 or 3 years is a pretty good concept. Yeah. We've got to see the details, and they got to come out pretty soon, I think.
All right. Dan, Charlie, Vince, thanks to all three of you.